Hey, left, right, out. Um, Before we get started, I'd appreciate a little bit of support. Like, subscribe if you can. Of course, YouTube's really, we got a warning or whatever, and so it's not. I don't have a big following on there, but it can never even get started if they, put you down in the algorithms. But on Rumble, we're doing okay. Um, Interesting day. CPI came out for September, and to no surprise, it was hot. I don't even bother talking about it too much, or giving it's just like we just know what it is. We know the fundamentals, and even their construed numbers paint a pretty dire picture, and let you know that the Fed is behind. They've been behind the whole time, and they've lied to you, just like so many other government entities. From no inflation to transitory inflation, or I'll consider it rising prices. It's so blatant. Inflation is a monetary expansion. We have two contrasting things going on there. So there is, one, we can look at the bond market and we see a complete inversion. I've seen the 10-year has been inverted with the 30-year even. So you got almost a whole entire spectrum of inversion there. I saw 2-year was at 4 or 5 almost. It's pretty incredible. But what we've seen today with that initially in the open, a huge flush out, or not a huge flush out, a down day, pretty orderly, nothing to write home about. 500 points in the Dow, 60, 70 points, I believe, in the S&P 500. Then, like a switch, you had the markets rally. Now, I don't know for sure what the cause of this is. I'm going to give you a couple options here. It could be one of them. It could be multiple ones. I believe that it's probably a smattering of a number of these things. Start with one. Case one or hypothesis one would be this is the markets. Let's go with the simplest one. It could be short covering. A lot of people have been short, and now you're getting kind of like a bull market rally because you're seeing it go. The S&P is going up against that resistance level at 3666 or 3665, whatever you want to say. It's bounced up against that. It's almost up 2.5% today. Okay, well, there's going to be part of that. No matter what these other hypotheses come true, there's going to be guys that are short covering because they made a little money, or they're scared that they might get their faces ripped off. Two, another hypothesis here. The market itself is calling the Fed bluff, right? Pretty much. It's saying, look, we keep getting these bad inflation numbers. You guys are raising rates, supposedly actually doing some QT, and nothing's happening. So either you guys are going to buck up and do like a point rate hike, or do some severe QE or reserve requirements. And that's what I've been saying. They need to raise reserve requirements. But even if you do something, it's not going to stop it. So we're going to get into the stock market, which is an inflation hedge in a number of areas. We're going to jump in there. We're going to call your bluff. And then that hypothesis, a lot of these pivoters are no longer in there anymore. This isn't a pivot rally. This is a rally calling their bluff. And in fact, a lot of the pivoters that were kept pushing this thing up here and there, they reaped what they sow in the fact that they're setting the Fed up for even more rate hikes. Well, this is the same thing. It's the same. It's a different means or a different justification with the same ends. All this is doing is going to justify the next cut. You don't have that capitulation in the market, which is going to cause the Fed to pivot because they do look at the market. Unfortunately, that's just the way it is. So that's another hypothesis, which I think there could be a smattering of both. Another one would be that the market would have a severe sell-off, and we're kind of setting up maybe for that, even though you didn't really see it in the VIX too much. The VIX was flat even with that sell-off, but there could be the plunge protection team. You have certain Fed banks that go in there and backstop the market just to make sure that there's some kind of orderliness, and sometimes they can spark rallies. So a plunge protection team, maybe. I mean, that's something to look into. The other thing is, the other hypothesis or theory could be that the market's calling out the Fed itself, that they're going to pivot anyway, no matter what, because the Bank of England's already pivoted despite their numbers. That now that we have some really weak data in a lot of these other areas, that despite the inflation numbers, the Fed will pivot anyway. Now, you're not seeing that in the bond market now that you have the, you're not seeing that really play out, but I'm just giving you a bunch of different theories that you're probably not going to hear on a CNBC. So one is kind of like a lot, I guess that one I brought up before is kind of almost like a loss of confidence in a calling out. Now, here's what's going to happen. This is kind of justifying this rally. It's a rally. It's hitting up against resistance in there. If it can break that, maybe you get more of a relief rally. If not, you're probably going to see some more selling, because once a rational market comes to the terms that there's a number of businesses that are going to have to access the capital market. And when you're accessing the market now and you're looking at a Fed funds rate of 3% as opposed to all these things have been built up off of 0%, then you have some real issues. Other thing is, you look at some of the, this is a little side topic on the Fed's justification. I was listening to CNBC today a little bit, and of course everybody's like, well, hey, inflation's raging, we got to get in the market because that's the best inflation hedge. They're betting against the Fed. It's kind of interesting because you never fight the Fed really, in a sense. Granted, they are behind the curve, but they have no idea what they're doing, and essentially, but luckily they just got this one hammer and they're just banging nails. If you know what that analogy is. Anyway, so they were just talking about that, and one of the things, where was I going with this? There was two things I was going with the CNBC. One, they're always pushing something on CNBC. There's never a bear market they didn't think was a bull market, never a bull market they didn't think wasn't a bull market. It's always bull market. There's always something to buy. Everybody's buying something instead of selling. They've axed out the short sellers that are there essentially to sniff out these bad companies. Oh, the thing is, they're talking about how the Fed brought up sometime, and I don't know for sure because I haven't been able to read a lot of their stuff, that they want to squash the labor market in the increase in wages. Now, how is that deflationary? And I guess you could say that some people no longer can demand things. They can no longer go buy as much stuff. But at the same time, if they are real jobs that are in the economy, like economically useful jobs that are a sufficient allocation of resource, that are producing goods and services, and you axe those, you're actually knocking the supply out of the market. So you're not really doing anything to stave off rising prices. In fact, you're taking the supply out of the market at the same time trying to take demand out of the market. You want productive employment. The Fed shouldn't be the one dictating what it is, what effective employment is. You want a free market in that. Well, we don't have that. But so you need people making goods and services. At the same time, you need people saving and building up capital and whatnot. So it's a dichotomy in a sense, in the Fed's mind. But if you're a free market, a free enterprise person, and you understand the principles and dynamics of such a system, then you understand there's a huge misallocation here, and it's really hard for a lot of these guys at CNBC or Keynesians or just monetarists to really understand this. It's not very hard. It's a supply and demand issue. And understanding that not all employment is the same. There are misallocations of capital. Government employment is not good. In fact, that hinders things. You're hindering supply in a sense. So there's a lot I can go deeper into that, but these are short, under 20-minute podcasts. So I just want to bring that up, that it's, there's more to the story than CNBC likes to tell you. There are ways to play the market on the downside as well. And like I've said, actually today when the market was super low, I'll just for full disclosure, I went in there and I bought a few shares of this one gold company that I was looking at. So nothing much. I just added a little bit to bring my cost of ownership down. And it turned out to be a good move if I wanted to just trade it. I don't have much money in there, but I could turn around and sell it. But I'm building that position for when we get this actual flush out, and then sell my cover the shorts that I do have, and get into that gold stuff, and hopefully made some money, which we were doing good today. And then now we're like, right now I'm looking at the S&P as we're recording. We're at that resistance level I was telling you, which we broke that before. That level is kind of a key deal there, because if you look at a chart, granted, it's been broken, it's been severely breached. I don't know if that's the level where that top out and then we keep going back down. It seems as though there is a disconnect. Like I said, there's some theories on what the market's doing, but there's a disconnect to that. Now, in this one, I'm probably wanting to bring up, there's some issue and other things going on in the Russian-Ukrainian thing. There's a lot of other issues that are going on that I'd like to talk about, but I think the markets right now are acting fairly interesting enough that I would like to cover them a little bit more, and discuss trading. Now, another thing is, I guess within that, because we talked about the oil markets before too, Saudi Arabia, and in particular that the recent production cuts from OPEC Plus, and with regards to Biden, and I guess we can touch on that because that affects the markets as well. And you see, with our own domestic supply, we had a huge build, but we also had a production cut in a sense. So we had the markets going up on that, or with oil. At like 89 something, it's up another 2%. But anyway, so I wanted to bring up that there was a recent article, I guess a release from Saudi Arabia, talking about pretty much the interaction with Biden and the prince, or at least his staff. And he was asking MBS and them to delay the production cuts until after the election. No, that is the other theory that I forgot to bring up. That's the other theory, that the markets actually, now that the numbers are so bad, now they are anticipating they're trading the election cycle, that the Republicans will actually win the House and the Senate. That could be too, like on some of this rally. I'm saying that it's not, none of them are mutually exclusive. All theories can come up. But anyway, that triggered my thought, that other theory I wanted to bring up. I should write these things down sometimes. But anyway, so you have MBS and Saudi Arabian government letting loose like their thoughts, or what they said happened during this meeting, that they were encouraged to hold off these production cuts until after the election, which you can only assume it's obviously political. There's no bones about it. And he's in doing so by releasing this, kind of throwing the administration under the bus, and confirms what we here and many others have said, that the allegiances between Saudi Arabia and America are very strained, and the petrodollar is at risk, and the allegiance between them and Russia is ever more certain and solidifying. And what does that mean for us? It's not good. I mean, not to say I don't like the Saudi Arabian government. I think the Qatar situation's very unjustifiable. Also, there's a lot of questions with their involvement in the Vegas shooting, which is a lot of evidence to that, or a lot of circumstantial evidence that builds into like an actual case against them as a plausible actor within that shooting. But anyway, well, that's a whole nother thing. We can go. That's a whole nother deal. But anyway, I'll leave it there. Like I said, just watch some of these markets and just understand where we're at. It looks like we actually broke that resistance level now as I'm talking. But we'll see what happens. I mean, the fundamentals are still there. Everything we've said has happened. But you got to remember, the markets can remain irrational longer than you can remain liquid. So you kind of just be cognizant of that, and understand the basic backdrop, the macro level stuff to trade this stuff. But anyway, talk to you later. Peace.